Uranium friends, you look as I look. Let's have at it. So ETFs, URA, Urnm, URNJ, weekly charts. So FOMC today, tough to really just make any short-term decisions. I'm on a weekly chart, by the way. Any short-term calls. When I say short-term calls, I mean in the next couple of days, right? So there's going to be a reaction here. We get it. Pretty monster reaction today, and you can just tell by looking at the futures, right? So this is the S&P 500 futures, right? So that is the monster-sized red candle, right? So uranium was not spared from this route, right? So, but everything's been ripping, grinding up and moving. And, you know, maybe uranium hasn't participated. I don't know, right? So this is a weekly chart. This is where your downtrend. You lost a weekly. We started a weekly downtrend right here. Let's look at euro. I'm going to zoom in on it, and we'll just do real quick. All right. So, yeah. I should be back. I should try to get more efficient at messing around with these charts, but I don't know. Whatever. Boomer, Gen Xer. So yeah, the someone asked me the question, well, how do I know it's a weekly downtrend? Well, look, you've got this one. This is all one move, right? So this was a weekly uptrend, by the way, right? Because it held this bottom as a higher low. So this is all one move. Once you get your pivot, you look for wherever the higher low is going to be. It was there, and then it made a lower high, and then it made a lower low. So that is what constitutes the weekly downtrend, right? You have your high, you have your low, you have your lower high, and now you have your lower low. So all we're still doing is still looking for um, a higher low compared to this low, actually, right? So we've got a lot of space to go. So we have a Fibonacci tool up in here, right? And we're just sitting right on top of the 50% retracement at the moment. You need to see how that goes. Something tells me that it's going to continue in this downward trajectory tomorrow, only because everything else is, you know, there still might be reaction. So we are in daily oversold conditions at the 50% retracement at a decent. Well, we still have a little bit more to go on this volume profile. Let's just see what the volume profile looks even on the monthly. Again, and I'll point this out over and over. This is a very nice monthly chart. So don't get too caught up on the day-to-day action the way some of you do. I know that you might have been in higher numbers, whatever. Just don't lose sight of the fact that there's a beautiful monthly chart happening here. All right. So, you know, you long-term hodlers, you're gonna, you know, you're staying with it, I guess, right? Whatever. You all have to figure out what your risk is and when you think that your thesis might be wrong. So, back again to this daily, and it's still in waterfall mode. This is a daily waterfall. It's what was technical analysts like to say. Hey, it's a waterfall. Us traders, right? And waterfalls usually get some sort of bounce after some point in the drop. So we are coming into daily oversold. If you take a historical look at the RSI, does it get deeper? It does, right? So this is not a signal yet, right? So maybe if it comes down into the 25, 24 area, uh, you know, maybe we should be expecting some sort of, even if it's a technical RSI bounce, right? So, but it's not enough at the moment as far as historical RSI levels are concerned. If it starts getting a bounce up and out of here, fine, right? So your 50% retracement on the Fibonacci's, right? So the next place I'm looking is the golden pocket, right? The golden pocket on a Fibonacci retracement, the 61.8 to 65, right? That's the retracement. That would still give you the monthly higher low, right? So if you're looking at it on a monthly perspective here, let's just take it from here, right? This is a good base to take it from. So let's just say we're taking it from this base. You have your low, you have your high, you have your higher low, you have your higher high, right? Into a lower low, into let's see, is it really? Let me get rid of these arrows for a moment. Into a higher high, right? So this is it's an expanding range, some like to call it, there is a bit of a megaphone look to it, right? And the megaphones are really just so difficult to play. And I know a lot of people are probably like, oh, it doesn't matter, I'm not a trader, whatever. Yeah, I get it. But this is monthly megaphone happening, right? So megaphones get really tough. They can be really, really brutal on any time frame. So what happens? It expands as things move along in whatever range they're in, right? So the megaphone is tight here. You start getting your bounces, right? The bounces are expanding. These undercuts are fine, right? The bounces are expanding in the megaphone, right? And they're really tough. Megaphones love to stop people and players out on every time frame, whether you're long or short. They are painful patterns, but they exist, right? So we have to know all of this could be coming into play. That's what a megaphone is. And this is a monthly megaphone. So, hey, it makes for great trading, right? So, but if you're someone that just at least looks at the crayons on the charts and the numbers and the letters and all those good things, you can kind of create a plan. You're going to know that we're going to get some breaks in both directions. Whether they follow through is another question. This could be a megaphone pattern, but going on this monthly, and I hope it's not, honestly. Again, we're at the end of the year. There's probably tax loss selling. There's a lot more things to distract people out there. So if you want to get this megaphone a little bit better, because well, the weekly has a lot going on here, right? So um, probably something, because I want to get 3 candles, right? I would do something like that, right? And you could do it on the top too, but you get the basic idea. This is what megaphones do. They wipe everybody out, right? So there's your weekly mega on that. Okay, so it's a basic concept. Don't get caught up in the squiggly lines on the charts, all right? So, but at the end of the day, all that I'm looking for URA right now is a higher low, all right? Compared to this level. And if this level holds, the megaphone may very well continue, or maybe it finally tightens up. I mean, I'm looking for tightening up, and we're not getting that. It's an expansive range, which to me it just becomes problematic because those who don't understand or recognize or care about quote unquote the megaphone, well, they're just going to keep getting stopped out, and at some point or other, it's gonna destroy the trade. It could, but I don't see that as something that's going to be uh, occurring. All right. As long as this base in general holds, I think the space is fine. Right. So, and this is really just URA, right? And you can see it in the volume profile. We're starting to come into like a bit of an air pocket here. So yeah, there is some supports along the way. But your first red flag is going to be if we lose this level, which is what, 2270, 23. That's going to be our first problem. It's going to be something that's really going to be a problem for us. And that's just it. So tough action. Tough to sit through it. Tough to sit through it when you see like quantum names and things just ripping beyond belief. I get it. I actually get it, believe it or not. But Um, this is why I advocate selling into strength and buying into weakness, trimming positions, maintaining your core, and trading around it a little bit so you can. There's a difference between me and a lot of the people in the sector, right? So I look forward to and want these drawdowns to occur because of my style and the way I'm approaching the sector. There's plenty of people who aren't like that. Now it could be for whatever reason, you know. So there's people that bought these 2021 highs. I'm not going to get into why they bought them or who was behind it, or you're responsible for clicking the buy button and the sell button. Nobody else. Okay. If you don't want to do your due diligence and you just want to listen to some group of 6 people that all regurgitate the same exact narrative for the past 5, 6 years because they're so great because they bought the COVID lows. Great. Okay, you guys do that. Um, I don't look at it that way. All right. So even if I bought these highs, I'd be much more solvent because I knew how to trade through them. That's just how it goes. But regardless of that, um, this is what I like to do. So instead of being lamenting the fact because I'm still underwater from my buys from 3 years ago, I look forward to these drawdowns, and I suggest that you try to find that spot in your life in your trading journey where you want these drawdowns to occur, right? So if you have conviction in a thesis, right? So the nuclear thesis in general uh, for me it's a high conviction play, right? So, but that doesn't mean I'm always going to be position bullish. That makes no sense to me, right? Because I know that even though 10 years from now, maybe the world is nuclear and all these stocks are 2, 3 X's from here, which I doubt, but even if they are, um, that doesn't mean I have to sit through like 50 to 80% drawdowns. It makes no sense to me, right? So, um, somebody just sat through this drawdown. Maybe somebody bought this top. And they just sat through a 40% drawdown. And they're still not whole. And now they're getting smacked again right here. What's this drawdown going to be? Who knows? So the most likely scenario, of course, this is Urnm, by the way, if you hadn't figured that out. The most likely scenario is just the tightening range. That's what we're hoping for in this play right here, right? We just want this tightening range, and that's what this horribly drawn triangle I have um, is representing. Just the tightening range. Now I can fix this, of course, right? I'm not going to right now because nobody needs me to be showing how horrible I am navigating the site. So that's the deal. That's what I'm looking for. As far as I'm concerned, the only thing that matters in all of these ETFs are these September lows. As long as they hold, everything is fine. But this is what we're looking for. You want to see this type of deal materialize. And this is what I'm looking for. This is what, to me, by the way, is the most likely scenario. Um, and as much as this pullback has been hurting, it's just not. There's nothing wrong with it. It's normal. To me, this is normal in the sector, right? So this if this, again, crude line that I just put up here, I'll try to make it better. I can't, right? So the truth is that I can't even put a trend line here, honestly, because it's not, you could probably do like this descending triangle if you want. I'm hoping that this thing plays out in a manner that it gets a look like this. Okay, so that's what I'm looking for. I'm hoping that it plays out, so it works its way through this tightening range. Uh, it's just not, these lines are just here to represent some price action for you. Don't get caught up on these lines. Just understand that I'm looking for this look. That's what I'm looking for. I want the tightening range, and then we can see which way it's going to go. So, if this tightening range breaks bull, maybe then we just have to fight through some more resistance. But that's how it is. Your NJ is not going to be much different here on this. Let's just look so we don't get caught. Same type of deal. Looks exactly like Urnm. So I have these boxes here. They do define a value area. So in my opinion, if Urnj is coming down into this box, I'm buying it. It's almost like an auto buy for me. I don't really care, right? So even if and I could say, okay, well, this is an ETF. I'm less tradey, quote unquote, with it. So maybe I will wait. If it breaks these lows, then it's not a good deal. But if I'm buying down here in this 16 range and I'm risking $3 to maybe try to get back up into this box for another, $6 or $7, it's not a horrible um, risk to reward there. It's not great, but it's not horrible. So that's the ETFs at the moment, and we'll look at some other stuff in another video because I don't want to make these things too long. So over and out. I do want to point out one other thing on URA on this daily. We've got a gap down here right at this golden pocket. So in my opinion, whatever my opinion has or means to anybody, it would be no surprise to me whatsoever that we revisit that gap and quite possibly next week. Um, and I would like it. I wouldn't mind it happening. Personally, you know why? Because I'm a seller up here. I sell into strength and I buy weakness. So when I'm selling into strength, I look forward to the drawdowns, right? So let's just say you love Global Atomic, for example, and that's what you're going to invest in, and you don't care about any of the geopolitical risks involved, whatever. The Dasa mine is going to get financed and whatever, and your stock is going to 10x from here. You're confident of that, but you got to sit in it. That's what you have to do. Why not trade something else that's liquid to maybe help fund more purchases of Global Atomic shares, or maybe to offset the costs that you already have incurred with Global Atomic? This is what trading around the core is. You don't have to trade the same name that you truly invest in, right? So maybe you want to trade, I don't know, Ionic, right? You want to trade this name, and um, you want to fund your Global Atomic. It's nothing wrong with that, right? You don't have to do. You don't have to be in the same sector. Just be aware of that, right? So, like I said, when you trim into strength, you have the ability and the luxury of looking forward to the inevitable drawdowns, the 30 to 50% drawdowns that this sector regularly provides. And guess what? The sector also regularly provides those 30 to 50% upswings. Take advantage. Over and out.